Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 2, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing we have on the docket is the backup mic situation. I know the audio sounds a little off tonight. Go ahead with your comments. I may sound like I'm at the men's room at your favorite ballpark. We'll get a chuckle out of some of the comments. Let's discuss the daily chart of the SPY. So yesterday we had Kabuki Theater. It's over. The Fed, they did their thing. They went up, they went down, they finished poorly on the day. Today they had what's called a retracement day, a bounce day, a dead cat bounce day. They had every opportunity to fail them both yesterday and this morning. The choice was the rescue operation, and they finished basically a flip side of what they did yesterday, finished positive on the day, not necessarily recapturing yesterday's high or the day before's high or the 20-period moving average, but nonetheless, it was a positive close. So we'll take it as they chose not to collapse them. The trap door was not open. They did not pull the rug out. They went the other direction. But what we will note is, even though they went the other direction, what are they still doing here? This is still a bearish, wedgish kind of formation, a flag formation. Call it whatever you want. Each trader will call it whatever they feel comfortable calling it. But when you look at this, this is some kind of a flag wedgish formation. They can certainly trade in this channel for some more. And up in this channel, you have the 50-period moving average. You'll eventually have the trend line once again if they get high enough in the channel out here. For now, we'll take the market at face value, the trading in a channel, until they break this week's low. We're not going to look downward. We're not going to look toward the low from the 19th of April just yet, but this is a bearish pattern, and it will generally play out to the downside. And guess what? My whole premise, my whole thesis that you've heard me say many, many times in here already is that I think that this is a bounce and a downtrend. They're going to make a new low. It's a corrective move in the larger uptrending pattern. When you look at the monthly chart, yeah, we can have another month of downward activity. Sure, they can come and even retest the former breakout area. But until they do some serious damage on the weekly and monthly chart, this is a pullback in an uptrend. It's normal garden variety market behavior. Here's the weekly chart where you see all they've done so far is come into the 20-week moving average. We're going to watch very closely where do they close the week? Where do they close Friday afternoon? Do they close above or below the 20-period moving average? Do they close at the trend line, or do they close closer to the 20-week moving average or somewhere in the middle? We'll make our assessment from there. Each and every day, the market gives us more information that we have to go by. It's a big puzzle. Each and every thing that happens, each and every day that goes by, each and every candle, each and every pattern, each and every time frame is a separate and apart puzzle piece from each other. We're assembling the puzzle so that we're afforded the opportunity to look and see what the big picture is because we have the piece parts. You have to at least have the piece parts. We'll leave all the discussion about interest rates, inflation, the Fed, Powell, economists, bankers, all that stuff. We'll leave all those conversations to others on YouTube, in the blogosphere, on the television, Tout TV, wherever you might be listening to that stuff. We'll leave it to others to have that discussion. We're just going to focus on the charts. That gives us clues where we're going moving forward. The other stuff, they can have it. I want to point something else out that's quite interesting, and it leads us into another discussion. You'll see where today's low is. Here's the candle from today. The low print is 499.55. You see a line here at 499.60. Why is that important? Well, if you go back to last night's video and yesterday inside the numbers, the live room, we had a number down there and it became unfinished business. And yes, we did catch low of day. It was a second trade of the day. Wasn't the first trade. We attempted to trade higher. It was incorrect. We'll go over it when we go over inside the numbers. But then we were able to identify where is the place they're going. 499.60 picked off low of day. Traders got paid accordingly. How do you like dem apples? We had some early numbers inside the numbers. We had 50310, that's important. We had some stuff above we did not need. We had 500 give or take, 499.60, that ring a bell. That'll come out later. That was on the board yesterday. That was where we were pounding the table in the live trading room today, this morning. Remember, pause the video, read the notes, go back to the chart, and double check the work. We have a zone, 503.10 to 502.25. My contention this morning was that was a support zone. Turned out to be incorrect. We can't win 100% of the time. Traders understand that. We had a discussion on that. We learned something from the trade. We were able to get right back in at a lower price, make up the loss, get a gain out of it. They went up for the rest of the day. We caught the morning low. Half the battle, 3/4 of the battle is being able to get back on the horse type of trade setup. We had a losing trade early. We got right back on the horse, got the whopper. So let's get our faculties from a trading perspective. Here's 503.10. Then we had another number at 502.25. My contention was that was an area of support. They were going to bounce back up. Turned out to be incorrect. The thing this morning was that Mrs. Market needed to go to 499.60. They spiked it by a few pennies, ripped it back up in the other direction. The rest is history. Pause the video, read the notes, go back to the chart to double check the work. It's all in here. It's all in here each and every day. And once they started to fall, you see here at 10 o'clock comes out 499.60 down to 498. And this was the same that was on the board yesterday. 498.45 is the next support zone below yesterday's low. 500 give or take was that low. That was from yesterday. You could see it even here, 954. 499.60 is unfinished business. So I kind of had a hint what was going on, see it unfolding in real time. Again, pause the video, read the notes, go back to the chart, and double check the work. We had some stocks on the move this morning. We're going to look at Cuervo, Etsy. eBay was off the table, didn't hit its number. We'll look at Zillow. Take a look real quick at Cuervo getting a buzz cut at the open. You could see here 97.42 was the first number on the board. They came into it, they bounced, they gave you the base hit. Doesn't look like much on this chart, but they gave you the base hit. The high in this candle here was $99.19, and we're looking for 1% give or take from the entry. There it is. About Etsy getting a haircut at the open, you could see the two numbers, a zone 58.02 down to 56.92. Came into the zone, bounced it back in the other direction. The rest is history. The numbers worked. How about Zillow? They never tell you which ones are going to do this. You picked off the low, 38.50, give or take a couple of pennies. They ripped it back up in the other direction and basically trended higher to sideways / higher up for the rest of the day. You never know which ones are going to give you a pseudo rocket ride, a real rocket ride, a nice pop. That's why we take a profit at a base hit and we try and hold a trailer. Talk about it every single day in the live room, multiple times. I want to talk about something else as it relates to the spider and a couple of other things. So we had a short trade that was issued from the Lazy Swing Trader Automagical Algo System, short the spiders at 509. Traders in the live room, tons of traders in there. We took it with put options. It was an alert for the Lazy Swing Trader, but in real time in the live room, I told him that I was going to take it with put options, and here was the strike price. Here was everything involved. There was a trade issue alert today. It was a cover the short. It was first profit target on the spider. What was the alert? 499 when the spiders hit, when the SPY hit 499.75 right in front of low of day. How did it know? How did the Automagical Lazy Swing Trader Algo System know where the top was, where the bottom was? Doesn't do it every time. Can't do it every time. Can't do it on every stock, but it did it this time. The point is, many, many traders got paid very handsomely on those put options. Well done. We held them for about 3 days. Some covered yesterday, some covered today, 4 days, 3 days, whatever it was. There was another Automagical Algo alert, Baidu. Exit today, 2 profit targets today, 107.90 and 111.99. The high of day was just a spike above 112. Our entry was down just over $100. Nice trade, about 9% on the trade. Nice trade. Lazy swing trader, automagical algo system. CHRW, exit today, 8202. Took this one a while, but they gave us the deal. By the way, it's not all guns and roses 100% of the time. We get stopped out. Got stopped out of one this week or today, DRI, about a 5% loss, but also got stopped out of SJM, which is Smucker, and guess what? We got stopped out at break even after having already gotten a gain, the base hit in our pocket. Base hits do what? They put you in the Hall of Fame. Follow the process. I have a process. I have a rules of the road. Has all the traders in the Lazy Swing Trader Automagical Algo System product read the rules of the road? It's in the training module. Read the rules of the road. It's the process. How about the IWM over in Camp IWM? Are they doing anything different than the spiders are doing today? No. They went up today. They're pushing up toward yesterday's highs. They're a little bit ahead of the game in terms of where they are relative to yesterday's high against the spider, but they're still making the same bearish wedgish pattern in here. And if you just do this and you say, look, they're just riding this area right now, and you could create this wedge. And when they break the chain, they break the chain. But right now they have a chain, and therefore until they break the chain, they're doing a bearish, wedgish, flaggish thing until further notice. What about the folks down at the transportation department? Pretty good turnaround today after making a new low yesterday. They reversed the whole thing. They're still below all the moving averages. The trend is your friend. They're still bearish. It's still in a bearish, flaggish, sloppy-ish type of situation going on below the moving averages on the daily chart. But this was some rally off yesterday's low, off the likely pies in the face issued yesterday by traders, not just in the transports, but just across the board, buying puts yesterday afternoon, markets collapsing, sell them down into the close. They're looking for a big gap down. They're looking for follow through. They get what today? They get a pie in the face. How many times do we see that? We see it all the time. That's why I talk about it all the time, and I point out when we see it all the time. Therefore, you hear me talk about it all the time, so you know we see it all the time. Figure that one out. We're interested, by and large, in Friday's close, the weekly close. What are they going to do at the end of this week? Not just in the transports, across the board. What's everything going to do? They're going to rally them up into the weekend, or are they going to kill them on Friday? They're going to have Friday follies. We'll see. Speaking of Friday, a little housekeeping. If you're a live room member, Jordan will be moderating the live room on Friday. Inside the Numbers will be closed. I will give Jordan information he needs in the morning from a numbers perspective, but from a Inside the Numbers perspective, that will be closed. I've got a day off, and we're just going to leave it at that. Anything different going on in the Qs? Nope. Same thing as the spiders, into the moving averages, bearish, wedgish type of pattern. No change. We're not going to belabor the point. All the charts look very similar to one another. We'll just leave it be. Interestingly enough, the XLF does have a different chart. You have a potential two-way situation, right? You have a potential high, lower high, but what you also have is off this move from the low, you have a bullish kind of flaggish situation. So you have something different going on in the financials. You can call this a bullish wedge, a bullish flag. You can call it whatever you want, but that's the concept, bullish wedge, bullish flag. Doesn't matter what the name is. You see, here's the flagpole, there's the bullish wedge, the bullish flag, and this will generally resolve itself in the upward or northern direction somewhere around here, $42 or so. We don't have that situation in the spider. We don't have that situation in the Qs. We don't have that situation in Camp IWM. It's a different chart setup. Each chart is independent of one another, gets analyzed independent of one another. We don't correlate markets. A lot of traders, a lot of investors, pundits on TV, talking heads, they like to correlate markets because this is doing this should be doing that, or this will be doing that. We don't do that. Those things happen for points in time, but they forget that they break apart, and they just have it in their mind. They're stuck on, what about this correlation from 32 years ago? SMH looks like the rest, looks like the IWM, the Qs, the spiders, all that stuff, minus the XLF. Again, we're interested in the weekly close. We'll see how they close out the week, give us a better assessment going into next week. It's all about holding The lows from the 19th for the bear case, the bulls need them to hold that low. The bears want below this low, start the next leg lower. In my thesis of an ABC, we have an A leg down, B leg is the bounce, the retracement, the everything's fine leg. The want everybody to believe the correction is over, back to the bullish side, buy the market, buy the dip, cash on the sidelines, all that stuff. I think they hit him one more time before they actually take another leg higher. That's my contention. We'll see what happens. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.